SMF Street Traders, as you know, I did these charts for you yesterday during your trading, and as you are short the S&P, once again, I'm going to let everyone know on this. I'm calling, and I already have. We already have been selling short and continue to add to positions as warranted until we get through this holiday when the big players come off. But here's the thing. Here is the triple bottom. We're going to come down to that red line. That's slightly right here. If we break this lower trend line at the 20-month moving average and sell through it, our next area of support is right around 952. If we sell through there, 872 is right here. And if we break any of these support levels, first we got to break this. This is that triple bottom action. This is that reversal pattern that we talked about, and when we were selling short these highs up here. Here's the thing, though. Support 1, you've got some minor support right in here as well. That'll be about 906 on the S&P. But the problem is, if you take the high reversal and you take the lower high reversal, so there's the high reversal. And if you take when we came up and we tested half of the SMF Street monthly bar, we sold off. We came up, we tested again, and we've sold off below the 10-month moving average. When we break the key levels of that S&P, we will continue to add more positions on the S&P ultra short. And basically, this chart is in a bull trend on a weekly chart on the SDS. And I will be happy to put that here. Let's just type in SDS. Okay, this has been sitting in a long-term bottom, folks, SMF Street Traders. And we got that breakout to those highs, and now we've been accumulating again in here. This is the high up here. When we break above this high bar, that's at 38.69. We are breaking higher. But up here is the monthly S&P 500 chart, and this is what we've been doing. We've traded it very successfully all year. And basically, we're above the 10-week. The body's above the 50-week. Here's what it looks like. You're above the 10. You're above the 20-week. Not only that, the bullish part of it is that this bar right here, the high of that bar, that this week right here, the week that we're in, is holding the high of that bar. This is recipe for big breakouts. And if we come down and break this 20-month moving average over here, then that's when you're going to see the biggest breakout, and that's when we would be adding, you know, another 2, 3, 4, 5,000 shares of this. Because if we break the key support here on the S&P 500 index, then that means we've got these other support levels that go clear down here to 810. Now, with slower growth, slower GDP and everything else, when they come back off vacation and off their little wonderful holiday, we're going to see if they start selling, and we're going to see what these price action, these little current bottoms right here on the S&P is where we're at 1034. So basically, the S&P came down to 1039 on the low of the day, printing at right now 1043 on the S&P. That 1039 breach is going to take us, and we would see if we can come down and what happens at that 1020 handle. A break below the 1020 handle puts the 1010, 1006 area at breach. But with low volume that we're having, we're probably not going to see that yet until the big players come back off vacation. And that means that this whole monthly trend that started, there's a lot below the market. And there's very little upside. And that's a major topping reversal pattern bear market. The monthly MACD is increasing. The percent DS monthly is pulling away from the DA. It's weakening. That's weakening. When volume returns in these markets, and if those bulls aren't standing, just get their head chopped. So basically, this will become a final bar. Right now, I'm going to tell you that the SMF previous monthly bar in July, which is right here, we're closing below that. That means that the S&P is even weakening more. as we are setting up here on the short side of the ETF for big time breakouts. And let me tell you something, there's a lot of room here, folks. And we've been putting in weekly and monthly all-time lows right there all year. We traded that breakout, we got that breakout, we got that breakout. We are going in the next breakout. This next breakout, if we break down, this breakout will be much larger and go much higher on the SDS. When we break these key levels here, welcome SMF Street Traders. Once again, it's an enjoyment to be paid on the right side of the market. And for the people that may be watching the video, no one says that you have to stay long the market and ride it down. That's what the public has always done. No one says you have to now, though, because you don't. What you need to do is get on board at smfstreetstockmarketfunding.com and understand how to position oneself. There are many others that we cover. There are many others that we're doing. And I've got a bullish breakout. I'm above the 10. The body's above the 50-week moving average. I got the 10-week ascending up, going in the right direction. And I've got the 10-month flattening out and about to turn over. And I've got those support levels. When they sell through, I'm breaking higher. And once again, we enjoy you, SMF Street Traders. This is the video. You'll have it. And we'll start adding to these trades when these breakouts occur. What we will be looking at, just so you know, is that we're going to draw a horizontal trend line right here. That's half of that bar. That's going to be our upward resistance. When we get above there, when we break down here, we're going to get above there and we're going to consolidate. But this is set up. This side is set up for a breakout as of right now. And this S&P 500 is in a bear market monthly sell signal, a bear market weekly or monthly percent DS crossover.